Bitcoin just broke through a major support level, and what I'm about to walk you through explains exactly how serious this move is. As of November 20th, 2025 at just after 8 p.m. UTC, Bitcoin is trading at $86,982. We're analyzing the past month structure from October 22nd through today, and what we're seeing is a significant breakdown from the established range. Over the next 15 minutes, I'm going to explain exactly where Bitcoin sits in this monthly structure, which support levels just failed, where the next potential floor could be, and what has to happen for any kind of recovery to even begin. This isn't a shallow correction anymore, this is a breakdown that changes the entire picture. Think of this as understanding how Bitcoin went from comfortable territory to crisis mode in just 30 days. Let's break down what happened and what it means. Let's establish what the normal range was before this breakdown, and you'll see immediately how far outside that range we've fallen. Picture the past month's range. The bottom was at $86,100. The top reached $116,400. That's a $30,000 range that Bitcoin was trading in for most of this month. From low to high, that represents a 35% rally that happened earlier in the period. Here's the critical part. Bitcoin is currently trading at $86,982. That puts us essentially at the very bottom of the monthly range, actually just $882 above the absolute low. Think of it like this. Imagine a building where the ground floor is 86,000 and the top floor is 116. Bitcoin spent most of the month somewhere in the middle to upper floors. Now, we're standing on the ground floor looking down at the basement. This positioning is significant because it tells us the entire month structure has been violated. We're not correcting within the range, we've broken below the established support and are testing whether there's any floor underneath. The market went from trading comfortably between these boundaries to crashing through the lower boundary and hovering just above it. When price breaks structure like this, especially on a monthly time frame, it signals something fundamental has shifted in market psychology. Buyers who were defending higher levels have either run out of capital or lost conviction entirely. Stay with me because understanding these next 5 levels is critical. They're the difference between knowing if this is just a temporary washout or something more serious. There are 5 mathematical levels between that monthly low and high. Bitcoin just crashed through 4 of them and is testing the 5th. Let me show you what that means. Starting from the top, 109,249. This was the first level below the peak at 116. The shallow retracement, only 24% down from the high. This level broke weeks ago when Bitcoin started its initial correction. At the time, traders thought okay, just a normal pullback. Wrong. Price didn't even pause here on the way down. That should have been the first warning sign when support levels that should matter get ignored completely. It tells you the selling pressure is overwhelming. Right now, 109 is about $22,000 above current price. That's how far we've fallen. Next level down, 104,825. The 38% retracement historically, where healthy corrections pause and reverse. This level failed too. Bitcoin broke through 104 about 10 days ago and never looked back. This is significant because the 38% level is often called the last line of defense for maintaining an uptrend structure. When that breaks, you're no longer in correction territory, you're in breakdown territory. Currently sitting about 18,000 above us. The fact that both 109 and 104 failed without any meaningful support tells you this wasn't normal profit taking, this was liquidation, panic, structural failure. Now here's where it gets really concerning. We're about to talk about the midpoint, and you'll see why breaking that level changed everything. The midpoint, 101,250. Exactly halfway between the monthly low at 86 and the high at 116. This is equilibrium. When Bitcoin broke below this level about 5 days ago, the narrative shifted completely. Below the midpoint means you've given back more than half of the entire monthly rally. At that point, you're not correcting within a trend, you're potentially reversing the trend entirely. Think about what this means psychologically. Anyone who bought in the second half of that rally is now underwater. Everyone who bought above 101 is sitting on losses. That creates its own downward pressure as people hit their stop losses or panic sell. The midpoint is currently about 14,000 above us. We're not just below it, we crashed through it decisively and kept falling. That's a major structural break that can't be understated. Golden ratio level, 97,675. The 62% retracement. This is where deep corrections are supposed to find support if any bullish structure remains. Guess what? This broke too. Just 3 days ago, Bitcoin plowed through 97,675 like it wasn't even there. Currently about 11,000 above us. When the golden ratio fails, technical analysts start questioning whether any support exists at all. This level represents the point where 62% of the monthly gains have been erased. Breaking it signals the monthly uptrend is not just damaged, it's destroyed. And we kept falling. The deepest retracement before the actual low, 92,584. This represents a 79% retracement of the monthly move. This was supposed to be the last stand, the ultimate support, before the monthly low at 86 becomes relevant. Bitcoin broke through this level yesterday. We're currently about $5,600 below it. Think about that. We broke through the 79% retracement level. At this point, nearly 80% of the entire monthly rally has been erased. We're in full breakdown mode, testing the absolute monthly low as the only remaining support. I want you to visualize this. Bitcoin crashed through 5 mathematical levels that should have provided support. 5 floors that should have held, and every single one failed. That's not a correction, that's a collapse in structure. We're now at the absolute edge, one support level remains, and if it breaks, there's no clear floor underneath. The monthly low at $86,100. This is it. This is the only support left in the monthly structure. Bitcoin is currently at $86,982, just $882 above that monthly low. To put that in perspective, that's less than 1% away from the absolute bottom. If this level fails, and I mean truly breaks, not just wicks down and recovers, there is no established support underneath it in the monthly time frame. The next support would have to come from older time frames, maybe the previous range from months ago. But in terms of the structure we're analyzing today, 86,100 is the floor. Break it and we're in free fall territory, looking for support levels from historical ranges that may or may not hold. The market is quite literally standing on the last floor before the foundation. Every other level that should have provided support failed. This is the line. Hold here and maybe Bitcoin can attempt to rebuild. Break here and we're looking at a much more serious situation that extends beyond just 1 month's correction. Now let's talk about what's overhead. That 92,584 level, we discussed the 79% retracement. That's now resistance. It was supposed to be deep support. It failed. Now it's a ceiling about $5,600 above current price. Every single Fibonacci level above us is now resistance. 109, 104, 101, 97, 92, all of them are ceilings now. For Bitcoin to recover, it would need to reclaim each one sequentially. That's not a quick bounce, that's months of work to rebuild structure that got destroyed in a matter of days. The nearest overhead resistance is 92.5. That's the first level Bitcoin would need to reclaim just to prove any stability is returning. Until then, it's all overhead supply. If you're wondering what triggered this breakdown, honestly, at this point it doesn't matter what the trigger was. What matters is the structure broke, and now we're dealing with the aftermath. The RSI at 30.37 is approaching oversold territory. Below 30 would be truly oversold, where bounces often happen. But oversold doesn't mean the bottom is in. Markets can stay oversold for extended periods during breakdowns. Bitcoin is trading 8% below its 50-day moving average at 94,800. That's significant separation, but again, in a breakdown, moving averages become resistance, not support. The trend strength is rated 4 stars, bearish, decisively negative. Volume has actually been low, which is interesting. Sometimes the worst drops happen on relatively low volume, as there are simply no buyers willing to step in at any level. The market comment says it clearly: strong seller pressure with price significantly below the range. Let's be realistic about what recovery would actually look like, and I'm going to be honest, it's not pretty. For any recovery to even begin, Bitcoin first needs to reclaim 92,584. That's $5,600 up from here, about a 6.5% rally. In normal markets, that's a reasonable move. In a breakdown like this, that requires buyers to step in with conviction after watching 5 support levels fail. That's asking for a lot. Even if Bitcoin rallies back to 92.5, it needs to hold it as support. Not just touch it and fall back, actually close above it, retest it, and hold. Only then does the conversation shift from "is the bleeding stopping" to "maybe we can recover." Until 92.5 is reclaimed and held, any bounce is just noise within a breakdown. Getting there would take days minimum, more likely a week or two of steady buying. And that's just the first step. Now here's the hard truth about what comes after that, and why this recovery, if it happens, would take months, not weeks. If Bitcoin somehow reclaims 92.5, the next target is 97,675, that golden ratio level. That's another 5,000 up. Then 101,250, the midpoint. Another 3,500. Then 104,825. Then 109. Each one of these levels now acts as resistance where sellers will show up. Think about the psychology. Everyone who's been trapped in losing positions at these levels will be looking to break even or cut losses. That creates supply at every level. So Bitcoin would need to work through 92, then 97, then 101, then 104, then 109, then even approach the monthly high at 116. That's 6 major levels to reclaim. In a healthy market, that's weeks to months of work. In a market that just experienced a breakdown, could be much longer. There's no fast path back. The script tells me there are Fibonacci extension targets at 124,000, 128,000, and 135,000. Those represent where Bitcoin could go if it breaks above the monthly high and extends. But let's be clear, those targets are completely irrelevant right now. We're not talking about new highs. We're talking about whether 86,000 holds or breaks. Those extensions are the destination at the end of a very long road that starts with simply stabilizing here. They are mathematical projections, sure, but mentioning them now would be like discussing the penthouse suite while we're trying to figure out if the foundation is solid. If Bitcoin breaks below 86,100 decisively, and by that I mean closes below it, retests it as resistance, and continues falling, we're in uncharted territory for this monthly structure. The monthly low was the foundation. Below it, there's no established support in this time frame. The next support would have to come from previous months' ranges. Looking at historical levels, you'd be searching for support from earlier this year or even late last year, depending on how far back you need to go. We might find support in the low 80s, high 70s, but those are educated guesses based on older structures, not established support from recent price action. A break of 86.1 means the monthly structure is completely invalidated, and we're operating in a new paradigm now. I'm not trying to create panic here, I'm just being honest about the structural situation we're facing. Here's what makes breaks of major support so dangerous. They trigger cascading stops and forced selling. Everyone who was holding and hoping above 86 suddenly realizes their support level is gone. Stop losses trigger. Margin positions get liquidated. People who were diamond-handing their positions start panic selling. This creates its own momentum downward. In technical terms, when a major support breaks, the market often enters what's called price discovery on the downside, but that phrase is too technical. Simply put, the market is falling until it finds a level where enough buyers say, okay, that's cheap enough, I'm stepping in. But where that level is, nobody knows until we get there. It could be low 80s, could be high 70s, could be wherever the pain gets strong enough to flush out the last sellers and bring in fresh buyers. The concerning part. Volume has been low during this breakdown. Low volume drops can actually be more dangerous than high volume drops because they indicate a complete absence of buyers. It's not even that sellers are overwhelming buyers, it's that there are no buyers at all. When volume picks up again, watch carefully. High volume on a bounce could signal buyers returning. High volume on further drops could signal capitulation and the final washout. The indicators are flashing warning signs, but there might be one small silver lining buried in here. RSI at 30.37, that's close to the oversold threshold of 30. When RSI drops below 30, it often marks zones where short-term bounces occur. But let me be very clear, oversold doesn't mean the bottom is in. During major breakdowns, RSI can stay oversold for extended periods. It can drop to 20, 15, even lower. So while being near 30 suggests we're approaching bounce territory, it doesn't guarantee anything. Watch for RSI to actually cross below 30, stay there for a bit, and then start curling back up above 30. That would be the first sign of momentum shifting, even if just temporarily. Bitcoin trading 8% below its 50-day moving average at 94,800. In normal corrections, when price gets 5 to 8% away from the moving average, it tends to snap back like a rubber band. But in breakdowns, moving averages become resistance instead of magnets. That 94.8 level is now likely to act as a ceiling if price rallies toward it. For that average to become support again, Bitcoin would need to get back above it and stay there. Until then, it's just another resistance level marking where the normal price should be versus where it actually is. Here's the one piece of potentially good news in all this data, and I stress potentially. Volume being low during this drop could mean one of two things. Either there are no buyers and we fall further until buyers appear, or the heavy selling already happened at higher levels, and this is just the slow drift lower as people who wanted out already got out. If it's the latter, then when buyers do return, there might not be much resistance to a bounce since the supply already sold. That's a big if though. Low volume can go either way. Sometimes it's the calm before more storm. Let me give you the unfiltered truth about where we stand and what to watch. Bitcoin at $86,982. Less than $900 above the monthly low at $86,100. Every single Fibonacci support level from the monthly structure has failed: 109, 104, 101, 97, 92 all broken. RSI approaching oversold but not there yet. Trend strength decisively bearish at 4 stars. Price 8% below the moving average. Volume low. The market comment says it plainly: strong seller pressure with price significantly below range. We're not in correction territory. We're in crisis territory. What I'm about to tell you might be hard to hear, but it's the honest assessment of this situation. 86,100. That's it. That's the level. If Bitcoin holds above 86,100, there's a chance to stabilize and attempt a recovery. That recovery would start with reclaiming 92.5, then working through 97, 101, 104, and so on. It would take weeks to months. There's no quick bounce back from a breakdown this severe. If 86.1 breaks, there's no clear support underneath in the monthly structure. We'd be looking for support from older time frames, potentially in the low 80s or even 70s. How deep it goes depends on where buyers finally decide the price is attractive enough to outweigh the fear. The market would be in freefall until it finds that level. Nobody can tell you where that is because it's not on the chart yet. This is what a structural breakdown looks like. Not a correction within an uptrend, it's a complete failure of the monthly structure. Mathematics showed us 5 support levels. All 5 failed. We're now standing on the 6th and final one. Fibonacci framework that usually guides Bitcoin behavior did its job. It showed us exactly where support should have been. Problem is the market didn't care. It tells you something about the intensity of selling pressure. No hype. No false hope. It's the structure showing us we're at a critical moment. Hold 86.1 and maybe rebuild begins. Get in, we're in uncharted territory looking for the real bottom. It's where Bitcoin stands on November 20th, 2025. That's the brutal reality.